Hello and welcome to another update video about the DXY. The situation is largely unchanged. We had a bit of a reaction to our resistance area up here. We're going to take a look at that in a minute. But overall, the DXY hasn't moved a lot in the last few days. But I think next week we could get some decent volatility due to inflation data, but also the interest rate decision by the Fed, which is going to be next week. And until then, we might see not too much movement. We have a very clear defined resistance area here and two scenarios. And in both, I expect price to go, I expect the DXY to head down lower. The very first scenario indicates that of the September high, price came down in an A wave, rallied in a B wave, and is now coming down in a C wave. In this scenario, we're now in the C wave, which is a 5-wave move to the downside. In this, we we broke down in a wave 1, rallied then in a corrective ABC structure, reached basically resistance to 78.6 retracement at $104.80. This is sort of the maximum really in a wave 2 that price should do. The 78.6 retracement. A break above that would make us morph into the alternative count or the second count. And from here, it should now break down in a third wave and then should get a fourth and a fifth. This is going to be confirmed further if price breaks below support at $101.64. However, at the moment, the price seems to be coming down in a corrective fashion. Here, a lot of overlaps. In this scenario I've just shown you, we should actually move down quite quickly in an impulse. That can of course still happen, but at the moment price looks rather corrective. That makes me think about the alternative count, which at the moment is very valid as well. They are both very likely. It literally depends on the pivot points, the support and resistance levels, which ones break. And both would eventually turn down lower, right? But in the second scenario, price is doing this. Yeah, we moved down in 5 waves, but instead the A wave would actually sit here. This is possible as well. So this would be an A wave low. We're now moving up in a B wave, which is an A wave, a B wave, and a C wave. And then we come down in this yellow 5-wave move. So I think this is not unlikely because the B wave can certainly extend out a little higher. Okay, so basically it would mean that this A wave moves over here and the B wave there moves over here, and that we're just dealing with the B wave at the moment in an A, B, C structure. So this count is certainly worth consideration, and I think this is certainly to a degree likely actually, because the move down currently is corrective, which indicates we're actually looking at an A wave to the upside, a B wave to the downside. Here, as long as it's holding 101.64, I think this count is certainly very valid. Below 101.64, we have some clarity that actually the direct downside path is followed. And above 104.80, we have further clarity that this larger B wave is being followed, okay? Which could then sort of take us to $108 roughly. I mean, we can make some assumptions about, okay, where could it be heading to roughly? Okay, yeah, maybe the 1.618 extension around 108.60. But as soon as I have a B wave low in place, I can give you a target here to the upside. But eventually, bear in mind, this would just be the B wave and it would then follow down. So my interpretation is that either we go down directly or we get a little bit further of a bounce before we come down then. And it shouldn't really go significantly above that $108, $109 level. Okay, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.